don't forget we had an 8-month consolidation with a 40% range.
Yeah, that's why I ask.
Right. So generally speaking, it tends to be explosive coming out, the banana zone, right? And I kind of set people up for the banana zone, and here we are in the banana zone.
The crypto banana zone is officially underway, and prices are set to skyrocket faster and higher than anyone anticipates. That's the bold prediction from Real Vision CEO Raoul Pal, who believes the market is primed for explosive growth. According to Pal, post-election years often see robust market rallies fueled by shifts in regulation and leadership. He points to historical patterns, predicting a similar outcome in 2025 following Donald Trump's presidential victory. Pal foresees Bitcoin surging past $100,000 before experiencing a sharp correction, then rallying again toward the year's end, reminiscent of the explosive cycles of 2017 and 2013. Make sure to stick around until the end of the video, as Raoul Pal reveals how he believes crypto will play out in 2025. Also guys, if you want to stay most up to date on the crypto world, I will send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all free. Click the first link in the description, enter your email, and join 50,000 others to become a better crypto investor. Now, here's Raoul Pal with his Bitcoin outlook.
So the question is...
So we're in the banana zone. So we're in... You're saying we're firmly in the banana zone.
How could it not be bananas, right? 50% in a month.
Yeah. How big are the bananas in the Cayman? Because that's quite a big banana.
Okay, they're not very big here, but we're not far from a lot of big banana plantations in different islands. But so that's a decent sized banana, but that's the start, right? Because generally speaking, the post-election year, or what we would call crypto fall or crypto autumn, tends to be very strong. So it tends to be very strong. The macro backdrop is obviously very good because of deregulation, new government, all of that stuff. So we've got a good setup. It's gone far and fast. I think everyone's a bit PTSD'd still, so which is why I err towards the it probably has one more squeeze because so many people think it needs the correction now. But, I hear your point of view too. So I'm not, saying it has to be one or the other, but that's my view. It goes up first. Everyone thinks, oh, it's fine. We're at 110. We're getting 150 now. And then it corrects in everybody's faces quite sharply.
You're saying Max Payne is another leg up. That's what you're basically saying. Max Payne is sending this thing one leg higher.
Yeah, one leg higher in kind of disbelief, and then kind of trapping a bunch of new entrants in, and then it does the typical 30% correction in a week and a half, and everyone's like, holy shit, what is this thing I've bought? Why did my friend at Thanksgiving tell me, cousin at Thanksgiving tell me to buy this? It's gone down 30%. We've got to go through that sort of stuff. Then normally it should rally all the way through till US tax season.
Which is April. So that's April.
Yeah, it's the March-April period. It usually is extremely strong going into that. And then if it's very strong, then you have a very big correction because everyone needs to pay some taxes. So, and then normally what happens is it corrects again. So you can see it there in 2021. It then had a 50% correction that time. And I'll come on to that in a sec. And then it rallies into year end. I think we're closer to a 2017 analogy, which was a much stronger back end of the year. I think people have real PTSD from last time. And I was actually going through this morning, what was the key factor that caused the stunted cycle last time? It's because the speed the business cycle went up straight out of recession and how fast financial conditions peaked. They peaked in March of 2021, and the market essentially peaked there with the second attempt at rally. 2017 peaked way towards the end of the year. So it was just the weird setup of the post-COVID, inject all the liquidity, then, oh my God, we need to withdraw it. That setup, I think, caused that cycle, while 2017 and 2013 were more similar.
Okay, and
so that means a correction over the summer and then a big rally into year end.
Similarly, Fundstrat Capita CIO Tom Lee has predicted that the Bitcoin bull market will continue this December and announced that the first cryptocurrency will reach well over $100,000 by year end. In a recent CNBC's Squawk Box interview, Lee discussed how the increasing demand for Bitcoin from institutional and retail investors creates a supply shortage. As more and more investors buy Bitcoin, the scarcity will drive even more pressure, pushing its value to new heights. Lee is confident that once Bitcoin breaks the $100,000 mark, a greater surge in demand will follow, boosting the price even higher. He predicts that Bitcoin will close the year well above $100,000. And it's only a matter of time before this happens. Now let's return to Raoul Pal as he shares more expert insights on crypto.
Go back to the longer version of that. Because everyone shows this and goes, oh my God, it's awful. That is a big kind of wedgie pattern. It doesn't look catastrophic, right? It's been kind of sideways range.
Yes.
But my guess is, same way as you, that ETH probably outperforms. And the reason being is you're just going to deregulate this thing. And if you are a financial institution, you will tend to build on ETH or ETH layer 2s. And the reason being, it's like IBM or Microsoft. It's a broad, deep ecosystem. You don't get fired for doing it. I don't disagree. There's that weird psychology that goes on. It's also, I think, there is going to be fundamental flows behind it as well. I think ETH overbuilt capacity or block space for where we are currently in the market because of the layer 2s. But over time, I think we'll use that block space up because I think the institutions will use ETH. Again, think of Apple versus Microsoft. There is no investment bank in the world that uses Apple. The ecosystem of developers and applications for Microsoft is much bigger. This is exactly the same.
Okay.
So we may use Apple at home, we may use all Apple phones, but the big corporations don't use Apple unless they're in the media industry.
And that's because they feel more comfortable with Microsoft devs in the institutional setting, so to speak.
And you can hire more because there's more around and there's more applications already been built on it. So it's past the kind of Lindy test. So they think, okay, this is the easiest way to do it. So let's say we're a bunch of banks and we want to have some internal settlement system between us for derivatives, whatever it is, right? We're unlikely to use Solana. We're more likely to use EVM. So if it's NASDAQ, I think it could be Solana or Sui, something, because it doesn't have to integrate. It just needs to work fast, right?
Yes.
If it's something that needs to be settled, processed, clients, systems, accounting, all of it, the depth is all there for EVM. That's what's my working hypothesis. I'm not sure ETH will outperform Sol, but I'm pretty sure from now on, ETH outperforms Bitcoin. Cast your mind back to 2020.
Yes, I remember.
November 2020 that ETH really started outperforming Bitcoin. And I think Sui outperforms Sol. So that's my risk stack. So the least risky Bitcoin starts to underperform. Now we're getting to alt season as Bitcoin dominance falls. ETH will do better, but Solana is earlier in the adoption curve, so it does better. Sui is earlier in the adoption curve and riskier, so it does better.
Do you think we're at the part of the cycle where we're like due for that first flash out?
I'm going to show you the chart because this chart, somebody's stolen off me. They're putting it around on Twitter, but the person who put it up copied our chart, but he used, I think, an 8-week or 8-week lead. We think the best fit is the 12-week lead. Now, who knows who's right in this, right? This is we're all fitting patterns and hoping it works. But generally speaking, for me, this is a rerun of 2017. It's very similar. And that peaked out end of deck, fell 35% in Jan for, like 3 weeks and then rallied. So your hypothesis, I think, is right. I actually think it probably gets to the kind of 110, 120 first. But it's pretty 50-50 which chart works. But really what it's saying is liquidity, because of the dollar going up ahead of the election, because of rates going up ahead of the election and the fears about tariffs and stuff like that, was causing that issue. And that does lead crypto prices. So a strong dollar, as we know, is a wrecking ball because it's tightening financial conditions. So that correction was the strength of the dollar. So money supply is increasing, but it was being offset even more so by that recent spike in the dollar, which I think is reversing now. 2016 Trump, exactly the same happened. The dollar went up and rates went up. January, they all reversed. and they continued down all of that period. So yeah, so we need to go back to 2016, right? So what happened is 2016, we had that spike, then it came back down for the rest of 16, and then eventually spiked later from 18 onwards. So, that was perfect, very similar kind of setup, not identical looking, but same idea. Now, obviously the Federal Reserve is supposed to be independent, but they're going to try and force something to get liquidity and growth up. If you think of the ISM survey, which is the business cycle, still below 50, which says the economy is not really growing very strongly. The services sector is growing a bit better. The manufacturing is not growing at all. So they're going to have to goose that for a bit. A weaker dollar, lower rates, injecting some liquidity into the system. Then it's going to take time to negotiate tariffs and what the outcomes are. The Europeans are already going, well, maybe we'll play ball with you a bit more, and the Mexicans have done the same. So I think we've got that. Also, I think Trump, one of the first things he will do in the first 3 months is try and resolve Israel. Also, I think Putin and Ukraine will get resolved. So a lot of the dollar premium, risk premium comes out, oil premium comes out, oil can drop lower, the dollar can weaken just because geopolitical tensions go down. So that's what I think the first order of business is: get this stuff out of the way, get things feeling better, get the economy moving, then start cutting government costs, which takes time, via deregulation first, and then via figuring out how can you save costs. And then there will be a broader implementation of tariffs, but that takes, even Scott Bessent said, we can't rush tariffs. It has to take time and has to be through. So that's more likely a 2026 thing, which is usually the back end of the cycle anyway, when liquidity is coming out. So you can see the pattern of liquidity and then liquidity coming out as they really start stripping out government spending and they really start tightening up on tariffs.
So there's Raoul Pal with his outlook on Bitcoin and crypto. With the dollar currently strong but expected to weaken in the coming years, Pal views this as a huge opportunity for Bitcoin. He believes tightening financial conditions and changes in government spending will drive the market in Bitcoin's favor, which makes this a critical time for anyone investing in Bitcoin. While the journey ahead may have its usual volatilities, the potential for massive gains is undeniable. Remember, if you want guidance through cryptocurrency's exciting but sometimes unpredictable world, our daily 5-minute crypto newsletter is here to help. Take the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.